Good morning. Welcome to Forex In Four. Today's Thursday, August 4th, 2011. All right, we're watching the euro here as we just got the ECB rate announcement, and as expected, they haven't made any changes to interest rate policy. But let's not forget that they also issue an accompanying statement, so it looks like Trichet is maybe speaking right now, which could create a little bit of volatility here. But the big news of the last 24 hours has been the Bank of Japan intervention that we've seen. So we're just going to flip over here. We can take a look at USD versus yen, and basically you can see here right last night, all right, at the 77 mark. Okay, they came in, they announced an intervention, and then boom, off it went up to 80. Okay, and now we're just pulling back a little bit. Now we've been calling for intervention for the last couple of days, and you know, I don't want to say, well, yeah, we said it was going to happen last night, but I basically did. But we knew it was coming because they were going to follow on the backs of the Swiss, and we know that what's going on in the marketplace, there's a lot of risk events going on, so you know, their currency is in high demand, so this was as good a time as any to do it. So Japan goes through with the intervention, and they also ease monetary policy. And you know, if you think about it, what's been going on here in the U.S., we're sort of back to this race to the bottom again, where you know, the U.S. is trying to keep rates low to keep things moving. All right, everybody else has got low rates. You have Switzerland lowering rates. You have some of the periphery countries lowering rates. All right, some of the countries that perhaps should be raising rates aren't raising rates due to the global uncertainty. A place like Australia. All right, and we've actually got we can look at Aussie right here today. All right, you can see that Aussie's been selling off quite a bit. This is a 5-minute chart we're looking at, but if we flip it over to say 30 minutes, all right, you can see that the Aussie's down quite a bit here from the 110 highs. So let's see. So that was the big news so far. Also, we'll just look at the pound here because they also had their rate decision. All right, and on the rate decision, they didn't make any changes either. The difference between the ECB decision and, of course, the Great Britain's decision is that the Bank of England doesn't issue a statement with the decision. They just say, okay, everything's the same, and then we'll have to wait for the minutes from the rate policy meeting, which is going to be out in about 2 weeks. Meanwhile, I believe Trichet is speaking now, so we could see some little bit of volatility from the EU. But right now, the pound actually looks fairly strong right here. And I don't want to call it strong. I just want to say less weak than some of these other areas. We know what's going on in Europe. Okay, right now there's markets are in pretty much risk aversion mode to start today. We've got stocks down lower across the board. We have oil is also down, trading a 91 handle right now. Okay, and we also have gold, which is a little bit higher. I'm a little bit surprised that gold's not higher than it is with the interventions that have taken place. So we've got some dollar strength happening here. More likely though, it's yen weakness. We can go in and let's take a look at the Swiss franc here. When you see what's going on, let's go back just a little bit here. And you can see the Swiss franc, it's weakening a little bit here versus USD. Now they had their surprise interest rate lowering yesterday, okay, where they were trying to you know, defend or weaken the franc a little bit. So they've got some work to do there at the SNB. Okay, but we've got basically dollar strength. You can see here dollar versus CAD with oil down. All right, we're moving back a little bit higher. So let's see, news that happened overnight. We had German factory orders came in much better than expected, 9.5% versus 6.8%. That was pretty good. And you know, we have also what else happened here? Not much really. It's just been these rate policy decisions that are going in. So we had Japan ease monetary policy. All right, we had the ECB stay steady on theirs. We had the Bank of England remain the same. Okay, and then we've got this yen intervention going on. We had the SNB intervention, and you know, to be honest with you, I'm a little bit shocked about gold. I thought we'd maybe see gold a little bit higher, and you can see it's starting to eke back up a little bit here, right in this 1667 level. But if we go back and look at this on 30-minute chart, okay, you can see that the highs are just right in here. So we're just sitting up above the daily pivots here, and you know, we'll have to keep an eye on gold and see what happens. But right now, we've got stocks lower in the U.S. We're going to get initial jobless claims, which are going to come out a little bit later this morning, and They're expected to be in the 370,000 range. We've been right on that 400,000 range for a while. So if it gets down this low, that could be a good sign. Maybe things are turning around. And there's also hope for tomorrow's non-farm payrolls report, that somehow that report's going to come in better than expected, and it's going to show that the economy is just not heading straight down. But the major theme going on right now is what's going on in the Eurozone. Okay, and we have the Spanish debt that needs to get out the door. All right, they need to see where the what type of interest they're paying on that. Okay, we've got Italy speaking right now, and Berlusconi came out, and he, there's starting to be like a just this general feeling of hey, maybe there's a problem with the banks. Maybe we shouldn't be keeping our money here in the banks. And they, usually they talk about a run on the banks, but this is sort of what they're calling a walk on the banks. And we saw it in Greece happening, and essentially what's happened is people are taking money out of the bank. They're literally stashing it in safe deposit box because everyone's afraid to keep money with the bank. So this could be a problem if it gets out of hand. So that's kind of what we've been seeing here from the ECB so far. So they obviously didn't raise interest rates because that would have been a complete disaster. But in the meantime, we've got these problems going on in the Eurozone that haven't gone away. All right, everybody pretty much knows that that this problem could spiral out of control. So their debt auction in Spain, the yields moved higher, and they're really trying to see how they can contain this problem. So a lot going on over there in Europe. That's weak European economy, weak U.S. economy. All right, you've got central banks trying to lower interest rates and/or increase, say, quantitative easing or monetary easing. You got Japan doing it. All right, the talk of the U.S. QE3. That's, I would guess, right around the corner. It's not a question of when, but how. And I think the world's really setting up for this global inflation story that's going to happen. All right, so you're saying, well, if there's global inflation, why is oil going down? Well, because the economies are slowing around the globe. Okay, that oil's coming off a little bit. Although it looks, I don't want to call it a tad unnatural, but right now we have markets still trading with their correlations. All right, so you've got gold here, which is slightly higher. I believe it probably should be higher based on what's going on with these markets today. But these correlations may have to flip around, and we may be in for a scenario where the dollar is going to strengthen because everybody else is trying to weaken. All right, going into potential QE3. All right, but it could also be a situation where stocks continue to rise in that environment. All right, we usually say risk on, risk off. Stocks go up, dollar down, vice versa. But we could be in for a scenario where stocks go up and the dollar goes up. All right, right now, if you're looking around the globe and you're saying, where do I put my money besides a safety deposit box? There really aren't too many other games in town except for U.S. stocks. And don't forget, these stocks have been putting out good earnings recently. Reason is that because they can just cut their workforce and improve profitability. So you've got better earnings coming from corporations. They're getting lean and mean. It's on declining revenues, but never ruin a good story for the want of a few facts. And that's really what we're at. So we're really concerned about the global macro picture, what the global economy is doing, and where people can stick their money. So gold has been that safe haven asset for some time. It's at those all-time nominal highs. It's inching higher this morning, which I guess makes sense in the grand scheme of things. But we're going to have to see how this all plays out. So European debt, that's a biggie. All right, U.S. non-farm payrolls report tomorrow. We got the Japanese yen intervention that happened, and the rate policy staying the same in the UK and the EU. So that's what we're looking at today, folks. Right now it's risk off. We'll see if that flips around perhaps on maybe the U.S. initial jobless claim. So that's what I've got. Good trading to all.